Stock market declines are natural. They're pain, but they're natural. But there are declines, and then there are declines. According to Deutsche Bank, a stock market correction is when the market drops by 10% or more. What might surprise you is that corrections happen about once a year on average. In fact, the market declines 14% on average every single year. Now, another interesting fact is that corrections usually are pretty short-lived. MarketWatch.com reported that most corrections last about 3.5 months, and many are much shorter. Now, unfortunately, no one's ever come up with a way to consistently predict when they're going to start and when they're going to end. History tells us that it's not worth it to try to avoid each of those corrections or declines. And then, of course, try to get back in at the exact right time. That's because we don't have a crystal ball. And people who try to do this usually lose out. The good news is, if you're a long-term investor, the run-of-the-mill correction just doesn't impact you. Remember, we already learned that the average correction lasts less than 3.5 months. But, as I said at the beginning of this, there are declines and then there are declines. I'm talking about bear markets. Bear market declines, they can be particularly unpleasant. A bear market could claw away 20% or more of your account values quickly. During these bear markets, it can take years to recover. And that's costly and emotionally draining. The mental anguish can be extreme. And investors have got to endure those periods if they don't have a strategy to protect them against it. Look at this chart of the financial crisis. It took investors 4 years to get back to even. Who needs that? Now, the biggest challenge that most experts don't mention is that because of that emotional cost, many people throw in the towel and they never invest again. They just stay on the sidelines. This is an enormous cost because if they do that, they give up potential growth for years and years and maybe for the rest of their lives. Did you know that there are still trillions of dollars sitting on the sidelines from investors that have been there since 2008? That's true. So I just want to get one point across in this video. It's important to ignore the noise of the market corrections, but it can be crucial to protect yourself against more serious problems like bear markets. And in the next video, we're going to look at the pros and cons of doing that. And after that, we'll look at a couple of ways people do this well. And also ways that people don't do it well. Okay, thanks.